Everyone wants to grow. Both personal and business growth is seen as valuable. However, we don't always manage to realize growth. Without research and data analytics, there's no compass. And even worse, there are still many methods applied today that mislead marketers. We at DVJ Insights believe that things should be done differently. We started our journey by using scientific insights to design the best methods focused on growth. At the same time, continuously asking marketers and clients what they need from research to improve marketing. At DVJ Insights, we share an ever-growing passion for research and data analytics. By sharing content, organizing events, our academic board, and in our daily support, we help our clients grow, understanding what their brand stands for and making advertising better. The success of our clients is the success of DVJ Insights. The journey of constant improvement was started in 2015, making us an award-winning and fast-growing agency. Our people are active worldwide from offices in London, Hamburg, and Utrecht. The choice to grow starts with the choice for the best research. DVJ Insights, the marketing and analytics agency for brand growth.
If you think about the topic of data-driven decision-making and the kind of stories you want to hear, I always have a personal favorite. And my personal favorite is related to the next two speakers. I read a lot of quotes from Patrick Doyle, who's the CEO, or was the CEO of Domino's Pizza. And one of his famous quotes was that we're a tech company happens to sell pizza. And if you look at the development of the company since he actually introduced that idea, and since the digital transformation and the commitment to data, the growth and the results were spectacular. Even if you look at stock value, I think it even beats the development of Amazon, who was already quite a spectacular development. So I'm very happy and very proud to have two speakers from Domino's Pizza today here with us, Pat and Nicky. You will introduce yourself a little bit and share your story around how Domino's is using data-driven decision-making to realize brand growth.
Thank you, Lucas.
The floor is yours.
Thank you.
Yes, hi. So I'm Nicky Claeys. I'm the Chief Commercial Officer for Europe.
And I'm Pat Nestor. I'm our Group Head of Strategy and Insights.
And we both work at Domino Pizza Enterprises, or DPE for short. And for those of you who don't know, Domino's is a franchise organization, and DPE has the franchise rights as the master franchisee for the Domino's brand in 10 markets around the world, which means we sell hot pizzas in over 3,000 stores. Now, specifically for Europe, we are active in 6 markets, and those include Netherlands, Belgium, Luxembourg, Denmark, France and Germany. Those are the 6 markets. Now, that's a lot of pizza, and we want to see if you know some pizza facts. So here are some to start with.
Yeah, I thought to get us started, we'd talk about the sheer size and scale and volume of the DPE business. So if we look at the last year, globally, across the 10 markets Nicky mentioned, we sold about 220 million pizzas. And over the course of that whole year, that amounts to 7 pizzas every single second for the entire year. Tons of volume, tons of pizzas. If you laid all these pizzas out end to end, they would actually circle the globe over 1.5 times. So it's really a tremendous amount of pizza that we're delivering each and every day, and this number has grown year over year. Also, I mentioned delivery. We're delivering a lot of these pizzas, right? So we're spending a lot of time on the road. If you think about all the time we spent in that year delivering those pizzas to customers, and you stitched all that time together and basically drove at that rate, you could get to the moon and back 2,000 times. So just an enormous amount of time on the road, an enormous amount of delivery. Helps you to understand, again, the sheer kind of volume of the DPE business. And I always thought another interesting way to start was to see how much you know, and to put out a trivia question to the audience. So for those of you that are listening in, we have an exciting opportunity to win some Domino's pizza. So after I read the question, over the course of our chat here today, you can submit your guesses into the chat, and then actually later we'll announce some winners, the closest guesses, and those folks will be the lucky recipients of some free Domino's. So the question is, in the trailing 52 weeks, if we look at our Domino's EU markets, the 6 that Nicky mentioned, how much total time did our customers spend shopping our website? So building their order, transacting with Domino's. If you think about how much time a single person spends to place an order, multiply that over the course of a whole year for all 6 of the markets, add all that time together, how much total time in weeks or months or years was spent on our websites in the last 52 weeks? We'll tell you the answer later, but submit your guesses into the chat.
I wonder who wins the free pizza. But as you can see from the pizza facts, we have a lot of data. And we are in the fortunate position that we are a retailer company. We sell directly to consumers in a digitally integrated network, which means we have a lot of data. 80 to 90% of consumers place their orders on our website via mobile, app, what have you. That's a lot of data on the e-commerce funnel, on the orders themselves, times of day, all of that. We also have our own digital advertising team that does all of the digital advertising for Domino's, which means that yields a lot of data. We also have the stores that are fully digitally integrated, which means that yields a lot of data on the pizzas themselves, when they're placed, how they get through the oven, on the deliveries. So all of that together yields a gazillion amounts of data points. But data itself doesn't mean that you actually make the right decisions. For that, it's just a start. You need to make sure that the data is accessible, the data is clean, the data is well managed. And part of that in the data strategy is what Pat's team manages.
Yeah, so as Nicky said, having a lot of data is great, but it's all about what you do with that data. It's about how you mine it, how you interrogate it, how you analyze that data in search of meaningful, business-driving, actionable insights. And that idea of mining data in search of actionable insights is one of our kind of guiding principles that governs how we make data-driven decisions at Domino's, how my team operates, how Nicky's team operates, and the rest of us around DPE operate globally. So today we actually want to spend the majority of our time together talking about this and several other guiding principles, so to speak, of how we make data-driven decisions, how we work together, and what our data principles are. So, as mentioned, this idea of seeking out actionable insights. Well, it's sort of easiest visualized here in this insights value chain, where we start with the data itself. Data, it's great to have the data, but again, you got to do something with it. So first, we can transform that data into metrics or into KPIs. And those KPIs are then thrown into our analyses. So this is what we're modeling against, digging into, interrogating, searching for trends, building ML models. And then coming out of those analyses are the insights. These are the things, these are the real nuggets that add business value and lead us toward an actionable decision, something we can take action against that itself drives value for the business. So the data, metrics, analysis, insights, action, that's really our insights value chain. Let's give an example of how this works. So in the e-commerce space, for instance, we have a ton of e-commerce data. I mentioned our websites earlier. So we have a lot of clickstream data, a lot of shopping activity data. This is all great. And from that e-commerce data, we build some of the common e-commerce KPIs a lot of you have probably seen. Things like conversion rate, visitor count, page views, time on page. And it's important to house these metrics and to track and trend them over time to understand performance. But even that is not enough to understand what the real insight is. So as an example, let's think about maybe abandon rate. Let's assume that we see abandon rate trending in the wrong direction and abandonment is increasing. Well, we want to conduct an analysis there. Let's poke around in there and understand why. What's driving this? What's really the root cause? Are we seeing abandonment rise everywhere on the website? Or is it a specific page where we're seeing a spike in abandonment? Is it all customers or is it a specific cohort of customers? Is it all times of the day and week or is it specific day parts? These are kind of the second and third order questions we'll ask as we conduct analyses in search of what is that root cause, what is that insight? Because we want to take an action, but we don't want to take the wrong action. And you can take the wrong action based on the wrong insight. So it's important to continue that investigation in the analysis stage. But it's also equally important to avoid something we call analysis paralysis. You may have heard this term, you may use it as well, but we really believe in it here at Domino's because we have a bias for action. We want to make our way up this insights value chain to the top of the ladder you see on the slide. We don't want to get stuck in the middle. You can do analysis forever. You can always say, well, let's pull one more data point. Let's just look for one more day. Let's ask one more question. Those things are good for a while, but you don't want to get stuck there. So avoiding analysis paralysis, having that bias for action is something we really believe in. And And the more thorough our analysis and the more we move away from just the diagnostic and the backward looking to the predictive and the forward looking, the easier it is to advance to those insights. And another way that we kind of gut check ourselves and avoid analysis paralysis is by making sure that up front we're really asking the right questions.
Right. And this is what Jaap actually also alluded to in his presentation. So it marries perfectly, even though we didn't, align beforehand. But it is one of the core principles. We're always looking at how can we improve, how can we drive the business, how can we increase customer satisfaction, how do we drive success? But what is success? Therefore, it's really important up front to ask the right question, set the right KPI, set the right objective. And it seems like an open door, like an obvious thing, but often you make the wrong assumptions. And I'll give you an example of where that's the case. Say that we introduce a seasonal pizza, as we often do. You introduce a pizza and you look at how it's doing. Now, in this chart, you can see that the new pizza in red actually is doing really well in sales. It has a higher pie mix, as we call it, which is percentage of sales of that pizza over the total number of pizzas. So you would think, at first blush, yay, really successful, great introduction, does really well. But if you look under the bonnet, actually, and you can see that in the next graph at the bottom, you see the red line, which is the new customer growth, new customer acquisition. You're actually seeing that since the introduction of that promo pizza, the customer count went down. So with a promotional pizza at entry-level pricing that's designed to actually attract new customers to come and try, your product for the first time, this would not be a success. So really important upfront to determine what is success. Why are we doing an initiative? Why are we doing a campaign? Is it to attract new customers? Is it to just drive sales? Is it to increase profitability? Is it to increase frequency? Is it to drive customer satisfaction? And that will ensure you do the right analysis, you make the right decisions. And this is not just for marketing. Another example, a very common one, I think, is in delivery. A lot of restaurants, especially with Corona, have started delivering. And at first blush, you think, okay, we need to deliver. We want as many customers as we can. We have really big delivery territories. However, when you look at this graph, which on the one axis, the y-axis, it has the Net Promoter Score, or customer satisfaction, an indicator for whether or not your customers will come back. On the other axis, you have the distance from the store, in meters or even in time. And what you're seeing that as you go further away from the store, your customer satisfaction declines dramatically. Now, this is logical if you think about it. The further away, the longer people have to wait, the colder the food, the less happy you'll be. And also, from an economic standpoint, it's less viable. The further you have to drive away from the store, the more it costs in labor cost, in vehicle cost. So also there, it's not a really good deal. So whilst at first blush you may think, hey, lots of customers, good deal, actually, what's better is to keep the delivery territories small and optimize the delivery area, which is what we're doing at Domino's. And so it's really important to ask the right question up front. And this isn't just for marketing, as I said, this is across the whole organization that we have this as one of our guiding principles.
So speaking of the whole organization, right, this idea of insights for all, how do we bring this to life? Well, we talk a lot about data democratization. And by that we mean putting the data out there into more people's hands, giving more people access to more data. But importantly, it needs to be the right data, formatted in the right way at the right time, tailored to the right end users so that they are empowered to use that data to make decisions for their own functional areas. And not everybody needs the same thing or interprets or uses data in the same way. So we spend a lot of time thinking through the right sort of self-service dashboards and reports that we can build and disseminate throughout Domino's so that everybody has access to the data, again, that they need in an easy-to-use, easy-to-understand, easy to self-service and interrogate on one's own for that particular business unit. But you also heard earlier the idea of data privacy, right? And that's something that matters a lot to us as well. So you also see here treating data as a privilege. We really do believe that it's a privilege to have access to the data we do, and we treat that data with the respect and the privacy that it's deserved. And this is not just something that my team believes strongly in as data stewards for the business, but it's something that we all believe in. And we help to manage this by having data end users and consumers around the business. We don't believe that any one team, just my team, for instance, or just Nicky's team, should possess all the data. We believe that everybody should have a chance to have access to the data, but also should treat that data with the respect and security it deserves. We have folks working in marketing in an analytics capacity. We have finance analysts. We have development analysts. many people that are data consumers and data users. Those marketing analysts in particular are really focused on things like performance and measuring performance. And we really believe that the best way to measure performance is through incrementality.
Exactly. Now, our business is a business that isn't static. There's lots of patterns, there's seasonality, and I don't mean just, spring, summer, fall, and winter. There's all kinds of patterns in the business, such as, Monday sales. Monday, consumers are very different from your Friday, Saturday consumers. A new store performance will be very different from an existing store performance. Lunch performance will be different from evening performance. And performance and sales during a pay week, for instance, are very different from during a non-pay week. So if you don't take those shifts into account, you can very easily make the wrong conclusions. If I do a campaign in a pay week, and I see a lift, and at first blush you think, oh yes, business is up, great results. No, that's just a shift from the pay week, not necessarily the initiative. So really doing the right analysis to evaluate incrementality. Now, a case where it went really well is this one on the loyalty program. You're seeing the results in terms of sales and margin amongst members and non-members, and both are up. But as you can see, amongst the non-members, there's a certain lift, but amongst the members, there's a further incremental shift. And that's really important in all the analysis we do. We look at where is the incrementality, where can we actually have gains versus a pure shift. Another good example, I think, is in media investment. Now, as I said earlier, we have a team that does digital advertising, including Google search, and that team, is always looking at where's the best return on investment, where's the best return on that advertising spend. Now, if you would purely focus on return on advertising spend, you would end up actually just advertising to your existing customers. Because if you spend money on those customers, you'll have to spend less to get them to come back. So very myopically, that's what you would do. But actually, those customers will come back, usually. If you provide good service and good products, they'll come back naturally. So that's not incremental business. That's not a good use of the budget. So again, taking the step back and focusing on incrementality is really important. And what decision you'll make then is actually shifting a lot of that budget to focus on new customer acquisition or lapsed customer acquisition, which is the better business decision. So again, one of the guiding principles is really focus on incrementality. And that's not just for the loyalty program, that's across all our consumers. And we look at the long run at what is the customer lifetime value.
That's right. So customer analysis is near and dear to our heart. And it extends well beyond just the loyalty program to all customers in all markets. One of the simplest ways that we segment and think about our customer base and understand how is their lifetime value evolving over time is just through simple frequency segmentation. So is it a new customer? Is it an infrequent customer? Or is it a very heavy frequency customer? And like most businesses, you tend to have a lot more customers with lighter frequency and fewer customers with the medium and the heavy frequency. But it's important to understand flow between these cohorts and the relative value contribution of each one of these consumer groups. So first, if we look at something like average ticket, which is our word for just the single value of a transaction, what you'll see is that an infrequent customer or lighter customer tends to actually spend more per transaction than a medium or a heavy frequency customer. But we talked earlier about choosing the right KPIs, asking the right questions. To us, we really believe it's not about one point in time or one transaction. It's about the long term. It's about investing in customers over their lifespan and the lifetime value that they generate to the brand. And sure enough, those medium and heavy frequency customers, because of their additional ordering, yes, they might spend less per transaction, but overall they contribute a lot more value to the business. And this is just basic frequency segmentation, but we've actually extended this into an RFM, or a recency and frequency and monetary value segmentation, which has really formed the basis of what we're doing now from a CRM strategy perspective. But the truth is, with all the data we have and all the great data points that we're monitoring and measuring, sometimes you still don't have the data you need. And when you don't have the data, we really believe then it's time to conduct research.
Right. And we do a lot of research. Sometimes we set it up ourselves. Sometimes we do it with partners. And we're very happy to partner with DVJ on a lot of the research that we do, not just in the Netherlands, but in other markets as well. And when it comes to the research, it's so important you set it up in the right way. One of my personal pet peeves is when you do stated research versus behavioral research, because ultimately, as we all know, people don't do as they say. So making sure you pay enough attention to setting up the research with the right methodology is so important. Now, We do a lot of different types of research. We do product research, pricing research, brand tracking, ad testing, concept testing, all of that depending on, again, what the question is and what data we need. I'll give you an example of an ad test that we did recently, which was for the introduction of a new product category, which was buckets of crunchy chicken as main meal next to pizza, which we launched earlier in the year in the Netherlands. We had various ads that we had developed, and we wanted to make sure that what we were putting on the market and what we were putting on air was actually going to work. Because the media investments are such large, you want to make sure that you're making the right decision and not just throwing it out there. And we have in the past actually had cases where we have tested ads that didn't perform, where we actually pulled it. So it is really important to do it up front. Now, this was the ad that we tested.
Eten bestellen?
Ja.
Wat wil jij?
Pizza.
Nee, kip.
Pizza!
Nee, kip. Ja, pizza!
Get the box and the bucket. Naast pizza's bezorgt Domino's nu ook crunchy chicken aan je deur. Hele stukken malse kip, Southern-stijl gekruid en heerlijk krokant. Domino's nieuwe ovenverse crunchy chicken. Bestel.
Right. Now, as you can see from the results of that ad, everything is green or dark green, which means that on all the important metrics, the ad scored really well in the top 20 percentile. And we went on to air the ad and launch a very successful new product category. So we're very happy with what the research told us there. Now, this was research done in the Netherlands, but we're not active just in the Netherlands. And one of the other guiding principles I think is really important is when you do research, across different markets, that you try to standardize the method so that you can scale actually. It costs less, but also more importantly, you can cross-compare. It's not just for research, by the way, it's also for internal analysis on own data. The benefit of being able to cross-compare, comparing apples to apples, is that you know that the numbers you get out, if there are differences, you know they're real differences. If they're the same, they're actually the same. If you would use different methodologies or different companies to do the research, then when the numbers come out, you really can't compare. And that's really unfortunate because that means you really can't draw the right insights for your business. You don't know where are the real similarities and where not. Where can I introduce the same product or where not? Where are those customer insights the same and where not? Now, one of the recent examples that we did, again with DVJ, was a piece of topping research that we did in all of the European markets to really look at the potential of different toppings on a pizza. And as you can see from the chart in the bottom right, some markets are very similar, some markets yield very different results. So that really helps us to optimize the business and make the right decisions. Now, with that,
Right, so we've chatted you now today through our guiding principles that kind of govern and shape our data-driven decision-making process at Domino's. As I said earlier, things that my team strongly believes in, Nicky and her team, but really all of us across the world and across business units. These are the principles that guide how we treat data and analytics and insights at Domino's. So with that, we really like to thank DVJ for having us here today, and we'll turn it over to some Q&A.
Well, thank you for your presentation. As I already said in the beginning, I really looked forward to your presentation, and everything I expected actually happened. One of the things that I was interested by is that you mentioned the democratizing of the data. Mm-hmm. And as I know, I had working in market research for so many years, I know you have lies, damned lies, and statistics. How do you actually cope with that? How do you make sure, if everyone uses the data, that they don't use it for the wrong purpose?
Yeah, that's a good question. With respect to the democratization piece, we really do believe strongly that everybody can have access to data. Now, what they specifically need or want access to might differ based upon what business unit they sit in or what decision they're looking to make or their own kind of analytical savvy. So maybe the tooling might be different, but everybody that wants data should have access to the data. So we really believe strongly in that. But you're right, then there might be a conflict of, well, if I put data in too many hands, what if someone makes the wrong decision with it? And there's some nice checks and balances that we've set up organizationally where whilst we have analysts in business unit looking and analyzing data, we also have central teams, such as mine, that are not aligned to any one market or one business unit, analyzing data, generating insights, having discussions with our business partners. So there's a pretty healthy checks and balances, I think, that we've set up that prevents against that. But again, what we would not do ever is shield data or protect it or keep it for ourselves.
No, and I think there's a lot of also training because I think that's the most important. You have to know how to use the data, and you have to ask the right questions, set the right KPIs. So it's about training people as well. Even just day before yesterday, we had a training session by Max on one of the new data reports that came out. So we invest a lot of time and effort, both into the organization, into training, and in the discussion of what are we really after. And I think that together yields the right results.
Okay, thanks. Yeah, and I also like the word that you used, data stewards. That was very interesting. And also a lot of questions coming from the audience. One of that is from Niels Bruinsma, and he asked, how does this customer lifetime value relates to the Byron Sharp work on the 80-20 rule, or redefining the 80-20? You focus more on the light buyers, and the heavy buyers or the heavy users will come automatically.
I think what we do is we have a little bit more of a segmented approach, because I think that is one of the, I think it doesn't disagree with Byron Sharp at all, and I love his book and what he proclaims, but there are distinct differences between a family that buys pizza every week and may buy the same or not the same for 4 people, and someone who incidentally buys a pizza once every three weeks. And recognizing that those are differences and that those people, have different needs in terms of what they expect from you or what communication they're looking for you, I think that's the starting point. And personalization is a big tenet in terms of what we believe makes good marketing and makes people feel connected to the brand. And so that's how we look at the customer lifetime value and optimizing it. It's not disregarding one over the other. It's treating them, as distinct segments that have different needs and where you can cater to better.
Okay, and are then the heavy users, are those related to the number of times they actually buy something, or to the amount they buy at once?
Typically we think of it as, order frequency, so times per year that they're transacting or visiting Domino's. But the other thing I would add, and I totally agree, Nicky, but when you have, there's a difference I think between investing and also just leveraging a lot of the data science and analytical tooling that we have now and that we heard about earlier from Jaap as well, where frankly the 80-20 doesn't necessarily apply in my mind. It's just as easy to spin up a segmentation and to conduct an analysis across all customer types of all cohorts as it is to do it for any one. So there's actually, now in the world of advanced analytics, it doesn't actually cost you much more to do it for everybody and have these bespoke, tailored, customized segments. So for us, I think that segmented approach is very important.
Yeah, and I think to build on that, I think frequency is just one of the components of segmentation. Segmentation is more complicated than just a frequency segmentation.
Okay. One question also coming from Rufus Weston. His question is, how are you actually targeting young urban affluence?
How are we targeting?
Yeah.
I wouldn't say that we're specifically targeting young urban influencers. We're a very democratic brand, and I think everyone eats pizza. And that's one of the, I think, differences between our business as well and a lot of other business. We don't have a very narrow target audience. Now, when you do campaign initiatives, obviously you will have a certain audience for that campaign or that initiative. But we're a business that's actually very broad. I still remember when I started, I had a discussion with a media company and said, we want you to target a very narrow demographic. I was like, but we're not going to do that because that's not what our business is. That's not who we sell to. So, but I would say we're a company that primarily skews a bit younger. Families with kids, students, young working people, and we use the channels that they use. Basically it's no more difficult than that. You want to be and have the dialogue with your consumers and your clients where they are at. So we use a lot of social media, like I think with any company, and where we're maybe a little bit ahead or different than others. We're not afraid to try new things, to try new channels, to try new approaches. I think we were one of the first to go on TikTok when it came out and started. We've actually done some other tests as well with other channels that are coming up now, like Discord and others. So I think that's the way to do it. Just keep the finger on the pulse. And one of the things one of the ways we do that is we have in our stores, we have a lot of our team members are very young, and part of that demographic, they help us stay sharp. So I think that's the way we do it.
Okay, thanks. There's so much more questions, and I would ask anyone to also add those questions to the chat, and we will see if we can come back to those later. But of course, one very important question is, how much time do we actually spend online?
Exactly.
So yes, oh, sorry.
No, go ahead.
Grand reveal. The grand reveal. So the answer is 902 years worth of time. So in just 1 year of real time, our customers are spending 902 years of shopping time on the website. Maybe more than a lot of you thought, I don't know. Nikki has the results.
Yes, I mean, some people came really close, so it's really good to see. We have some really sharp people in the audience. So number 3, actually, who came close, but not the closest, is Luc van der A, with 1140 years. Then on second place is Declan O'Callaghan with 837 years. And the closest was actually Katja Meijer with 1,000 years. So well done. You all get free pizza.
Great guesses. All right. And congrats on the free pizza.
Thank you. Thank you.